Hello and welcome to the FOMC preview video for their January meeting, where they're once again expected to trim their asset purchase by another $10 billion, taking their February purchase down to $65 billion per month. They're expected to trim $5 billion in treasuries and $5 billion in mortgage-backed securities. So recent comments from the FOMC members have suggested that the Fed will continue to taper in measured steps, taking their QE program into the end of the year. This is including comments from Fed's Rosengren, who was the only dissenter at their last meeting when they decided to taper, and he said he's comfortable with the Fed tapering asset purchases at every meeting by $10 billion. However, on the other hand, there have been a few issues which may support some of the more dovish members. So recently we have had the issues in emerging markets with weakening in a lot of the emerging market currencies, including the Argentinian peso and the Turkish lira, and that has prompted the Turkish central bank to hold an extraordinary monetary policy meeting. Separately, another reason which could support some of the more dovish members of the Fed is the weaker than expected jobs data that we have had in the early part of January. So December's non-farm payrolls report showed only 74,000 jobs created, and despite the unemployment rate falling to 6.7%, the participation rate was at its lowest in 35 years. So we may look for the Fed to address this issue in their monetary policy statement. We could also see the Fed mention their unemployment threshold for rates, although recently and at their last meeting they did say that rates are expected to stay at their current levels well past the unemployment rate falls below their 6.5% threshold. So what we're looking out for then is the Fed. They are expected to taper their purchase by $10 billion, taking February's purchase to $65 billion. However, we could also look for them to change their forward guidance, maybe their unemployment threshold.